we have to bump along, right? Maybe we need to retract a little bit, but I don't think that we can make new highs off of a market that was up 12% in 2 months without bumping along a little bit. And so to me, bumping along would be great. But yeah, I think we can make new highs. They just don't have to be made every day.
Yeah, you don't think there's trouble ahead? I mean, as I said, this sort of storm that's gathering over in Europe, it's not like China's going gangbusters. Sure, they're stimulating the heck out of the economy there. But why should we believe that we can avoid all of that weakness around the world?
Well, I don't see it as a storm gathering in Europe, right? There's still positive growth expectations. Yeah, it's almost nothing. It's like 1%. But you have the ECB really working hard to protect the banks and to protect the economy, I think in a way that they hadn't done in past recessions in Europe. So I don't think that we're going to suffer from that. I'm just reminded of one quick thing. I have this wonderful client, an older British guy, and he always says, one bets against the U.S. at one's own peril. And I visited with him yesterday, and I was very much reminded of that. And I think the U.S. absolutely can remain strong. I think that earnings were down in the first quarter. I think that estimates could pick up towards later half of the year.
We in a little bit of a downtrend for a while, or no?
It feels that way. We talked about that earlier in the week. Listen, Europe needs the trade tensions to go away with the Chinese and the U.S. probably more than the U.S. does. There's a significant trading partner of the Chinese, and I think they need the Chinese economy to re-stimulate the growth. You have to look at the internals in the market. I think what's concerning is the euro falls to its lowest level since June of 2017. President Trump was not happy this weekend talking about Federal Reserve policy and a stronger dollar. Well, he's got himself an even stronger dollar this past week, and that's a little problematic for the market. So market's in a vacuum. Obviously, we're seeing a little bit of a near-term correction, which I think everyone expected. But I think overall, at some point, it is a pause that's going to refresh.
This is going to be the dip that people buy?
I think it is, Scott. First off, let's go back to about a week ago when we set a recent high, not an all-time high, but a recent high on the S&P 500. We're only off about 2%, a little more than 2% from there. So at that time a week ago, many of us would say, hey, you know what, a 3 to 5% pullback would be healthy here. It would allow us to consolidate gains, and it would allow buying the dip. I think that is what will happen. As far as Europe goes, I just want to come back to that. Let's put a little perspective to this, that their GDP growth is 1 to 1.5%. When growth is good in Europe, you're looking at 2%. And I just want to put that perspective out there, because to what everybody's been saying about Europe has never led the U.S. into recession, it's true, and it's true for a reason. You just don't look to Europe for good growth. If you needed to get good growth, there's a very simple solution here. Unfortunately, it lies in the political realm, which is to stop the trade war that has been going on with the EU. Remove the metals tariffs and don't impose auto tariffs, because those auto tariffs will kill Germany, the heart of European GDP growth.